Hey, it's Mark Alexander with Benchmark Mortgage. Wanted to touch on a hot button right now in 2025 for a lot of my clients and a lot of my real estate partners. And I wanted to go over navigating condos and condo transactions in 2025. And I really think the biggest thing you can do as a buyer, or even if you own a condo, is educate yourself and understand the landscape of what's going on. And so I'm going to drop some information in this video today that I really feel like will help you navigate what's happening in the condo market, condo financing, and just how to prepare yourself for transacting condominiums in 2025 and beyond, as there's been a lot of changes. So let's dive right in. So this is what the news is saying right now, and I just pulled this last week. So this is from YouTube, and so South Florida condo market's in trouble. This is going to destroy condos for good. Unstoppable collapse. Daily Mail, Florida's been hit by the worst real estate crisis in decades. And so you're seeing just a lot of negativity in the news. And while I do think that there are some validity to some comments about what's happening in the condo market, it doesn't mean it's an absolute collapse. It doesn't mean it's an absolute catastrophe with condos. There's actually a lot of opportunity right now. And the key is to, again, educate yourself before you buy to make sure you're buying in a good building, or make sure you understand what's going on in the building. So that way you can not only get financing, get a loan, but you can be a successful homeowner while you own those units. So these were the condo law changes that happened in May 2022. Senate passed Bill 4D. I'll keep this very quick, but basically condos 3 stories and higher have to undergo an inspection for 30-year inspections, and then every 10 years after. They're also requiring to do what are called SIRS reports, or SIRS studies, which stands for SIRS. And I'll go to the next slide here. So SIRS is a structural integrity reserve study. And so what these are doing is it's basically mandating that condos have to reserve funds ahead of time. And so, for example, a major repair would be a roof replacement, right? And so if the engineer says that the roof needs to be replaced in 7 years, and it's a 20-year life normally, the HOA now has to start reserving based off of 7 years left, right? Other things would be, concrete work and restoration, waterproofing, seawall repair, things like that, right? And so basically it's now been mandated by law, because of what happened with the Surfside collapse in 2021, where the Champlain Towers came crashing down. New laws have come in, especially in the state of Florida, but all across the United States, where condos are having to reserve now, where they hadn't been doing that in the past. And so you're seeing, more special assessments coming up because of this. The other thing is we're seeing rising insurance costs. So a lot of people don't realize that when you own a condo, you pay for an HOA fee. But a big part of that HOA fee is to pay for the master insurance policy for the entire condominium. And so we're seeing HOA dues rise, specifically down here in South Florida, but across the country. One of it's due, because of the SIRS studies and the added reserves being needed now. But the other thing is that we're seeing rising insurance costs in Florida and across the country, and you're basically seeing that HOAs are having to add fees to their HOA, to the monthly HOA dues that unit owners have to pay to cover these master insurance policies. Now, the other thing what's happening is that buildings are renewing insurance policies, and they're basically reducing less than normal coverage to try to keep the premiums the same. Now, what this is causing is it's keeping owners happy because the HOA dues maybe won't increase, but then when people go to sell or buy real estate in those condos, Fannie Mae and Freddie Mac, which are the 2 largest mortgage bankers in America, who write all the conventional guidelines for mortgages, they're not passing requirements. And so now it's causing issues for buyers trying to get financing in buildings like that. And I'm going to share a few examples because it may sound kind of doom and gloom right now, but the reality is that there are some good things that are coming out of this, and we'll talk about that. And there are some ways around it as well. So, I pose this question to you as the viewer of this: do you think law changes are good for the condo market, right? Do you feel like these law changes that happened in May of 2022 are an actual good thing? And because we're not doing this one-to-one, I'll answer this. I do think they're a great thing. And I think that you're seeing a lot of turbulence in the condo market this year, last year, moving in probably to 2027. We're going to see some turbulence in the condo market, not from a depreciation perspective, but you're seeing more listings and activity. But I do think when you fast forward 3 years out, 5 years out, 10 years out in the long term for the condominium market in the United States, this is actually a really good thing, because the HOAs are going to start putting the reserves in for repairs proactively versus everything's been reactively up until this point. And if you think about the word special assessment, special is not a normal thing, right? A special assessment shouldn't be a normal thing, and it's became a normal thing, especially down here in South Florida where I live at personally. And I do think that as we progress a couple of years in the future, we're going to see it go from special assessments to just being normal assessments, and the reserves are going to be part of those HOA dues, and the health of the condo market is going to be better than it ever has before. So let's go through some different condo financing types. So if you are looking to buy a condo yourself or know somebody that is, this is just a great thing to understand. There are conventional financing, which has the best rates, best terms, backed by Fannie Mae, Freddie Mac, what most Americans get when they're getting condo financing. And then there's non-warrantable condo financing, and I'll get into that in a second. So conventional financing, if a building can pass what's called a full review, you can put as little as 3 to 5% down on a condominium. There's some things that are required, right? The HOA has to reserve at least 10% of their income and put it into on their approved budget money. 10% of the assessments have to go into reserve accounts as an allocation in order to do that. If a limited review, let's say they don't do that reserve, for example, and they only do 5% reserves, well, the bank's still willing to lend on a conventional loan, but you may have to put down 25 or 30% down, or you could take out a small second mortgage to get behind that. So there are some ways around that. But then the third thing, and we're seeing more of this right now, especially down here in South Florida, is what are called non-warrantable condominium loans. And these are banks that are willing to lend money that don't fit the box for Fannie Mae and Freddie Mac, the conventional lenders. You can still get financing because it's basically banks that are willing to lend their own money and write their own paper to do a loan if something's not going right with the building. And usually you're going to see a little bit higher interest rates on these scenarios, not major, but if you're putting down, let's say 30%, maybe it's a quarter, maybe it's a half a point higher interest rate than a conventional loan. But if you're putting down like 10% down, it's going to be a much higher interest rate. And so you can do these loans with, 10 to 30% down or more, but just note that there are some stipulations. But if it's a great building and there's only a couple things wrong with the building, it may still make sense for you to look at something like this. So that's more of a one-on-one conversation though. These are some of the big troublemakers, right? We're going to look at as a lender, right, when we go to lend money on a condo, because the bank wants to underwrite the building just as they want to underwrite you as somebody that's buying the property. We have to look at the budget. We need to look at special assessments to see if there's any active special assessments, and if there's repairs needed, we have to look at that. Litigation, right? Is there any structural litigation, or is it aesthetic, right? Is it non-structural? Can we get behind that? Master insurance, we need to make sure that the building has the right amount of coverage. We want to make sure that, before you buy a building, before the bank lends 6 figures or maybe 7 figures of debt on that building, we want to make sure it's insured properly as well, right? Some of the less common things, but it can still come up: condo hotels, recreation leases, mandatory memberships, new construction, commercial space. If a building has more than 35% commercial space, that can be a problem as well. And then a single entity ownership. If somebody owns, a lot of the building, for example. So these are some of the big troublemakers when it comes to getting financing. And again, the key is understanding it and then having a team behind you, a lender, a real estate agent, people that are experts in this that know how to navigate this market, so you don't wind up 3 weeks in or 4 weeks into your contract with your boxes packed, ready to move in to your new home, realizing that the bank's going to deny the loan, right? It's just good to understand these things up front. These are some real life examples that we did last year and even into this year. So we closed at the Yacht Club at Portofino. This is at Miami Beach, South Beach. There's some special assessments where we were able to get a client a non-warrantable loan. They put down 40%, and the rate was only about a quarter point higher. The Waverly at South Beach is another one that needed non-warrantable condo financing because of the master insurance. The building has a $100 million insurance policy, but only $25 million of windstorm coverage. And so we were able to get around this as well. And then the third thing was Biscayne Beach, Miami. They're finishing up some litigations with an architect, and it was non-structural, so we were able to still get the client financing. And I've helped a few clients in this building as well. So these are some real scenarios down here in Miami, in South Florida, of what's going on in the condo market, but strategies that can keep deals alive and keep, making a smart financial decision. You just have to know what's going on and have a team that can help you through it. So we send this, and every agent that we work with, we provide this to as well. When you're going out and making an offer, this is a great email template. You can literally copy and paste this and send this to an HOA to get upfront with documents and questions upfront that we need to get related to the budgets, the insurance, the SERS reports, the special assessments, litigation, all that type of stuff. It's good to find out in day one versus getting 3 weeks into a deal and finding out at the last minute. And lastly, I'll leave you this. This is our secret weapon. We get a list from Fannie Mae and Freddie Mac on a monthly basis that's proprietary that we get for our clients that we can look up by zip code, by city, and we can see a list of over thousands of condos that are Fannie Mae approved that can do 3 to 5% down financing. And then we also have thousands of condos in the state of Florida that is Fannie Mae denied. And we can basically vet a list up front to say, like, maybe you shouldn't be looking in this building. It's already denied and you want to do 5% down, right? So we can use this list to help your home search and make a more educated decision as well. So wanted to share that. Feel free to scan this QR code. You can reach out to me if you want a copy of these slides. If you want to get signed up for our client value bombs, just education with real estate to make you a more successful homeowner and investor with real estate. And lastly, if you want to set up a one-to-one meeting, just shoot me over a message and I'd be happy to help out and set that up. So hope you have a great rest of your day and looking forward to staying in touch.